Hey everybody, welcome to this week's episode of Making Sense of It All. I'm your host, Jesse Stakes, and today I have Derek Rodriguez with KC Financial. Derek, thank you so much for joining me.
Glad to be here.
So we were talking a lot off camera before we ever got started with this and over the last couple of weeks about doing an episode, and we really wanted to talk about the transportation industry as a whole, not just focus on your company, but talk about the industry, where it's been, where it's going, and just kind of educate people as to if you're not part of that transportation and logistics industry, what has happened here in the last 5 to 10 years?
For sure. And I think the thing that a lot of people don't know about transportation is it's so much larger than people realize. Every product in every store on every shelf in all of America was on a truck at some point. So the transportation industry is massive. It's a huge part of everybody's daily life.
No doubt. And I think that, just to piggyback off of that, sometimes people think about planes, trains, and automobiles, but even if it comes on a plane or a train, it still has to hit a truck at some point in time.
Exactly. It always finds its way.
So let's kind of talk about, I know that we were talking about kind of where it's at right now, or we wanted to talk about that, but let's take a step back because you were saying something to me off camera, and I think that it was kind of something that people probably don't realize. The transportation industry was hit really hard, probably harder than most by COVID. So over the last 6 years, it's been a somewhat of a recession in that industry. Am I correct?
Yeah. So what happened during 2020 is, much like every other sector in America, there was a boom. People were buying, prices were surging, and transportation blew up. People were buying trucks and trailers like crazy. Businesses were booming, freight was up, everything was going great. Well, what that did is it drove demand, and so pricing on trucks and trailers was through the roof all time. For years and years, new trucks and trailers were kind of at a set price, right? For the first time in decades, all of a sudden the manufacturers are realizing what the demand is and they're raising prices on new equipment. Well, at the time, banks were wanting to lend on all of it. They were gobbling up all the business they possibly could. When you were working a finance deal, you could pick and choose what bank you wanted to work with because they were all as aggressive as possible. What happened is, that dream, it started to come down, right? The back end of that caught up with everybody. And so the market went through this big correction. Freight rates plummeted to an all-time low in our industry. And that in turn affected the market as far as pricing on trucks and trailers. And so what happened was at the height of it, brand new trucks, historically, you used to be able to go buy them for, 140,000, give or take specifics, right? At the height of this pricing boom, I was seeing invoices from customers spending $250,000 on a new truck.
Wow.
And banks were financing all of it with no money down. And so what happened when freight crashed, these customers are no longer making the kind of money they were making, and they took on all this debt. So they start slow paying and defaulting. And so these banks are starting to see huge default numbers, which, is extremely common. As a lender. You expect to have a certain percentage of defaults. Well, when you're lending on equipment that is now two or in some cases three times overinflated, and those are turning into losses. A lot of banks, like on a used piece of equipment, say they lent $120,000 and it defaults. Well, now they've got to go and they can go get $35,000 or $40,000 for it at auction, and they're having to eat the loss on the difference. And what it did is it drove a lot of lenders out of the space. We lost a couple dozen banks. Some went out of business altogether. Some exited transportation completely with no plans of going back. And then some had to merge with other banks or get their portfolios bought out. And so it created this massive hurdle to overcome, where all of a sudden financing semis and trailers was no longer easy. And the remaining lenders that stayed in the space, names that people have heard of, BMO, Crossroads, to name a couple of the big players, they then began scrutinizing the types of deals that they decided to do. And so transportation went from this, booming, eat all you can eat type of industry to all of a sudden it's harder to get a semi financed than it is to go buy a house and finance a house, or to go get a business loan. And we've spent years now recovering from that. and it's finally 20 into 2025, now into 2026, we are starting to see the industry heal. But the transportation industry as a whole is very cyclical, and this particular cycle has lasted longer than any other cycle in the past.
So I'd like to take a step back because I think a lot of people that are in the transportation industry or that are around it understand a lot of this, but people that are outside of it, they may not. And it's so number one, a semi in and of itself is a very specialized piece of equipment. You see a lot of them on the road, but it's not like you can take a semi and convert it into a daily driver, or it's not like it can be converted into an average car or truck to where somebody's going to drive it to a different type of a job.
Yeah, so a lot of these companies, the misconception too is they have to buy trucks and trailers, right? They're constantly buying and offloading them. So these semis, I mean, they're running between 120 and 150,000 miles a year, right? It's a business essential piece of equipment, and so a lot of companies have contracted lanes or contracted relationships where they haul freight. Well, the place that they have the contract with mandates that they have newer and lower mile equipment because, the newer and the less miles it has, the less likely it is to break down. And when a truck breaks down, all of a sudden the freight that's in it is late, and it kind of trickles down in the supply chain there. So a lot of places want you to run newer stuff, lower miles. And that means that these companies that have relationships and contracts like that want to keep their fleet new, right? The other part of it is a lot of these bigger companies and medium to large size fleets run on a depreciation cycle. So they have a semi for 2 or 3 years, maximize the depreciation, and then they want to offload it and bring something else on. And so in our industry, it's buying constantly. And in turn, a lot of these companies aren't paying cash for that stuff, so they've got to utilize financing for it.
Yeah, so I'll ask on the flip side of that. You've got these newer pieces of equipment that age out of, say, like your A freight. What about your B and C players? Does it create a huge market for that used equipment that there's an opportunity for resale there, an opportunity to finance those pieces of equipment again for, say, someone who is an owner operator or somebody who is doing maybe less business or less volume, but they can still use that piece of equipment.
Absolutely, yeah. So there's a huge market for that, and the usable life of a semi theoretically is 1 million miles, right? The sweet spot that a lot of the medium and large size fleets offload them is usually around that 400, between 400 and 500,000 miles, and it's a good economic point for the smaller guys who maybe don't run as many miles or are just starting to cut their teeth where they can't afford to go and get a bunch of new trucks, that there's a sweet spot there for guys like that to scoop those up and put them on the road. And what I see is a lot of guys when they get started, and they've got a couple trucks or 5 trucks in their fleet or something like that, that those price point used trucks are good for them to get the commercial credit set up and to get their business started. And they've got a growth plan where they want to transition eventually into brand new or newer equipment. But it's difficult for a lot of people to start there at day one. A lot of
No
guys
doubt.
have to start with that used stuff.
No doubt, no doubt. So what economic indicators are you looking at going into 2026? What are you seeing, and like why is it that those indicators that you're kind of utilizing, what makes you feel positive about the future?
Yeah, so great question. It's really about keeping your ear to the street, right? So we represent a ton of, I would say, medium to large size fleet customers. One of my best customers happens to be one of the largest trucking companies in America. They've got between trucks and trailers almost 10,000 assets on the road. So that they've got a pretty good idea of the industry. And so we regularly talk to these guys. I'm talking to them every week, and you start to hear trends from some of the big players, and they've got a really good inclination of where things are going. And I'll tell you, towards the end of 2025, that early December, and then especially here in 2026, everyone's positive. Freight rates have come up. A lot of companies are transitioning away from getting by and making enough money to survive to profiting again. And I've reviewed financials from 2025, and you can tell that company financials are starting to reflect that, where they're starting to profit again. I'm seeing less losses. Bank statements are looking better for these companies. It's less low ending monthly balances. It's good deposits, good ending balances. What happened when freight rates were low is a lot of these, we lost a lot of trucking companies to bankruptcy, but the ones that survived, a lot of them were kind of month to month just trying to survive until things healed. And it did take a long time. So to answer your question, it's a lot of talking to the big players in the space that live in it, and the overall vibe of the industry is positive. There's the freight rates are going up. That's something that you can look at and see online. And the other part of it is, the banks are a good indicator too, right? Over the last 3 years, rates in our sector have done nothing but go up, and banks' credit boxes have tightened, and navigating a semi truck loan has only gotten more difficult. And I would say over the last few months, you're starting to finally see banks loosen up a little bit more. They're easier to work with. Some have an appetite for this type of stuff again, and especially the last 2 years, 2024 and a good bulk of 2025, transportation was like kind of no one was
Kind of a
excited.
bad word.
Yeah, no one was excited about reviewing a transportation finance deal because the bank knew that there's a high chance that maybe this defaults. And so, every which way it's starting to turn more positive and excited, and we're definitely seeing it. I can tell you that we're busier than ever. In the last 6 months we've got more volume than we've had ever in our company. And 2023 was our biggest year, and that was before things got really grim. The first half of 2023 was huge in transportation, and we're doing more volume now than we did in 2023. So we're starting to see the industry recover.
Yeah. Do you think that it's a lot like the real estate industry where you had everything gets busy and so everybody kind of jumps into something that becomes a popular industry, and then as things slow down, then the pretenders get out of it because there's no more hot money to be made. It's all like if you're in it, if that's what your profession is, then you're committed to it. Those people stay in and they end up benefiting when things turn. Do you see the same thing?
100%. I couldn't tell you the theme of the last few years is when you get a new customer, they started their business in 2020. So many trucking companies started in 2020, when it was
Right.
booming and you could go get a truck and essentially print money, right? Put a driver in it and go nuts. And so what happened is in 2020, SBA lending was real big, and people were getting money to grow, and a lot of people grew way too fast. And the downside of that is as soon as the market turned and they're making less money, those are the guys that went bankrupt and defaulted and kind of hurt the banks, right? So it was huge in 2020, but the guys that survived it, and especially the guys that have been around prior to that, yeah, they're the ones that are going to be in this industry for a long time. They're the ones that are starting to do well. And there are new companies being formed, but it's a lot less, at least from what I see, than 2020. 2020 formed businesses, it was massive.
Yeah, so the growth that you're seeing now, it's real growth. It's organic from the industry that's going to be sustainable, not necessarily that explosive growth where people, like you said, people just buying trucks saying, "Hey, I'm going to get into this business." And when things turn down, they have to actually make a living and go out there and fight for a dollar. They don't really know how to. They only while the phone is ringing, they were making money. But if they have to go out there and actually chase it in, they don't know how to do it.
Exactly. And I mean, just for numbers' sake, in 2020, a guy could buy a truck, could buy a semi, buy a used semi, have a $2,500 monthly payment, put a driver in it, pay the driver, whatever. But that truck could generate 30, $40,000 a month in gross revenue. And, a guy could go out and get an SBA loan or just leverage himself and go get 5 or 10 trucks and put drivers in it. And all of a sudden he's got a pretty
No
good,
doubt.
right?
Oh yeah, absolutely. No, I mean, and I think you see that in multiple industries where things get hot, it becomes attractive, it benefits people in the short term, maybe on like on the financing side. In the long term, it hurts them because they end up taking back a lot of assets. But no, I think it's very, it's a very well made point, and I think that people can relate to that in a lot of other industries.
Yeah,
You know,
I would compare 2020 trucking to like Amazon drop shipping and some of those other trends that, the early people that got in and especially in like the drop shipping, they're killing it, but now it's pretty oversaturated and difficult to penetrate. But I would compare 2020 in the transportation business to something like that. It was hot and trendy, and a lot of people dove in head first.
No, no doubt, no doubt. Another thing that is incredibly trendy right now, it's another thing that everyone's talking about is technology, automation, and innovation in industries. I don't think that there has been one industry probably touched more than the transportation and logistics business in multiple ways. But I'd love for you to talk to the audience a little bit about how artificial intelligence, how automation is being utilized in the transportation industry today.
For sure. Yeah. And I think this industry specifically, it's going to take a lot of time for it to actually trickle down. This industry is ran by it's an old business ran by, old minded people. And, that shows with the electric semis. That is a technology that does exist right now. And there's not very many of them on the road. West Coast is mainly where they're at, and the companies that bought them just to take advantage of the tax subsidy that they got for them.
Right.
So it hasn't trickled down yet. And a lot of I think the top 10 or 20 trucking companies in this industry kind of banded together, and they're very outspoken about not wanting electric, semis, although I don't think they're going to have a choice here in a few years. It's the world is heading that direction. I think where you see a lot of the automation and technology starting to affect it is in the technology that these companies or these drivers use in order to like book their loads and kind of manage it that way.
Yeah.
There's some transportation companies that now have developed or are developing their own proprietary load booking software. And there's companies out there that'll, hire you on and teach you how to be an owner operator by allowing you to use their technology. And they're profiting from all these different, you can book your loads through them and give you the freedom to do that, but they're getting money on that, and they're getting money on every dollar you make. And they're setting you up with a, fuel discount program. And I think that is really common now. And I think it's really, uh, affecting the whole freight brokerage and load board type space. And that it used to be the Wild West, and now it's a little bit more structured and things like that.
I'll tell you one of the most impressive pieces of software, and this really has nothing to do with automation per se, but when one of the most impressive pieces of software that I saw that has been developed in the last 15, 20 years within the transportation and logistics space is really controlling your asset as well, as far as understanding how your driver is driving that vehicle that you're giving them to
Oh yeah.
drive. I
Oh
think
yeah.
as one of the most impressive pieces of technology that I've seen, as far as telling you how much they brake, how fast they drive it, where they're at, to where you make sure that you maintain a level of control over that asset that you've invested in, that you've financed.
Yeah, so funny enough, I was a part of a large deal on some brand new Volvo semis for a big customer of mine, and we were intimately involved in that with the dealer. We did the financing, and one of the things I learned from that transaction is Volvo actually offers a service to their customers on their new semis, where every quarter they will fly a technician out to your office, and they will go through the data of that particular truck as far as fuel mileage and how every metric of how it's performing. And then they can actually log in and tweak things and almost tune the truck to, if you need more fuel mileage out of it, or, if it's running lean or whatever it is, they have the capability to see all the data and then make changes to make it more efficient to your type of business. And by efficient, these loads, for everyone out there that doesn't understand, a semi trailer could have anything in it. It could be fully loaded at 80,000 pounds, or it could have 5,000 pounds of freight in it, right? And that truck could be driving across the plains in Kansas where we're at, or up in the mountains. And so you need different horsepowers and gear ratios and specifications depending on what you're hauling and where you're hauling. And so having data, from a manufacturer like that and being able to make changes and tweaks, I mean, that's massive, because in this industry, if you can get an extra, we laugh like our personal vehicles. If somebody said, "Hey, I've got a way to get you an extra half a mile per gallon," I'd be like, "Wow, that's not really worth the time," right? On a truck, if you're running 150,000 miles a year and somebody can get you an extra half a mile per gallon, I mean, that adds up. And if you've got a fleet of trucks that you can deploy that to, that's a lot of extra money in your pocket.
No doubt. No, it means a lot more than to the average consumer. So you had mentioned SBA a little bit ago, as far as them jumping in, and they did. They financed a ton of stuff in 2020 to 2024, and probably a lot of things that they shouldn't have. But what other things now, as far as what you're seeing through current federal and state regulations, what things are really impacting the industry?
Yeah, it's a good question. I mean, it's like in terms of what banks are seeing, is that what you're asking? Like what do
Yeah,
banks scrutinize when they're evaluating if they should do a loan? I mean, it's
absolutely.
really like bank statements, and banks really don't like SBA lending or what is it? There's lines of credit out there that are kind of malicious, and so banks are really evaluating. They see obviously transportation's already a high risk, but they see that you had to go borrow money to make payroll and that you're barely skirting by, all of a sudden the risk profile of that deal is exponential. And so what you're seeing is these guys, you really have to build a, not only does the customer, but a company like us, you got to build a story for these customers and really drive home why they need the equipment, why they need the purchase, and sometimes back that with data. And so I've had recently, I've had a customer provide me with, and they're a sizable fleet, but provide me with their forecast for the year and growth plans and things like that. And so, SBA lending at this point is kind of a red flag, and things of that nature. A lot of companies are trying to borrow to stay afloat, and those are the people that nobody wants to lend money to in the transportation space.
Yeah, no, I think it's a great point, and I think it's given rise to a lot of non-bank lenders as well. Like because when a bank tells somebody no, or when somebody who's trying to get financing gets told no, I would say 9 times out of 10 that person doesn't say, "Hey, well, maybe I need to rethink my approach to this." They're gonna try to find a yes. And I
Right.
think that really is something that I have seen where it has given rise, it's given opportunity to a lot of non-bank financing, a lot of higher interest financing out there. So it puts people in an even tighter spot than what they were looking at when they were planning on buying something with potential bank financing.
For sure. And I would say the other overarching issue that they're facing, and not to get political at all, but the
You could get
transportation
political. There's no rules on this thing. So
the transportation industry is dominated by immigrants, right? I mean, these guys come over to America and they're happy to drive a truck, whereas as Americans, we may look down upon something like that. It's a hard job. There's no way around it, right? I personally, I couldn't live in a truck for 2 months at a time and live on the road and drive 8 to 10 hours a day. I certainly couldn't do it. And so it's dominated by immigrants because they can come out of a really bad situation and come to America and really build a life for themselves. And so the huge overarching issue in our space right now is non-domiciled CDLs. And so if you're not a U.S. citizen and you're here on a work visa, you will have a non-domiciled CDL, and it's a thing that you provide CDL in every loan, and it basically lets the bank know, hey, they're not a U.S. citizen. They're only here for a limited time. And so that unlocks a myriad of additional documentation. It's like, okay, we need to evaluate their work permit or their green card and start looking at when does it expire, because it's not a very fast process to renew that stuff. And there's a chance that they don't get approved for it. And so what we're seeing now is a lot of banks are saying, hey, we're not comfortable with all the ICE stuff going on, lending to non-domiciled or people that are here on work permits because for a short bit of time, all of a sudden people were disappearing. They're getting detained or deported or whatever, and now the bank's got to go locate that asset, repossess it, blah blah blah. So we're seeing a lot of scrutiny on that. And so what they're doing is that, they're still lending to these guys. You have to provide more documentation, and a lot of times the term length will reflect, hey, we don't want to lend it past when their work permit or their green card expires because they could, get denied a reapproval or whatever. So that
sure.
is the hugest pain point in our industry right now that I don't think a lot of people are talking about is navigating that. And there was probably a 2 or 3 week period a few months back where the whole industry just stopped. Everyone was terrified. No one knew what was happening. Customers were like, "Hey, we're pausing on the order. We're going to pause on the deal." Banks were, "Hey, we don't know what's going to happen if we're going to be able to close this." And everyone kind of panicked for a little bit, and then it lasted maybe 2 or 3 weeks, and then things kind of went back to normal. But now, each lender has issued here's a path to how you can do a deal with us. Here's what we're not willing to do, and here's what we'll look at, but we may need this additional documentation.
hmm I think it makes me think of unintended consequences. It's unintended consequences of these laws being enforced where they haven't been enforced in the recent past. It's lenders that have not thought about those things because they didn't have to. And now all of a sudden, all of those what ifs are creeping into an underwriter's mind and creeping into how are we going to look at this deal and what's the worst case scenario. And I think that whenever you're borrowing money, if you don't think that your lender is thinking what's the worst case scenario, then you're approaching it wrong from the beginning.
And everything that's happened since COVID, it's obvious that everyone's very apprehensive anyway to transportation. And it's a very risky industry, but these banks, they make a lot of money on these portfolios that are
100%.
transportation. But yeah, I mean, they're anything that like this that comes up, they're going to look at it with a fine-tooth comb and decide if it makes business sense to proceed with a loan or not.
Derek, you said it in the beginning of this, and I want to reiterate it. The world or this country runs on transportation and logistics. If trucks aren't on the road, nobody's getting what they're buying at the stores. Nobody are getting none of them are getting their Amazon packages. Walmart doesn't exist. I mean, none of this stuff happens without transportation and logistics. So no matter how risky something becomes, or it's a credit profile that people have to just figure out how to get comfortable with it because the industry is not going anywhere. It's not disappearing.
Nowhere. Yeah, it's going nowhere. That's exactly right. And it's unfortunate that the collateral damage of the post-COVID effects of the market crashing and pricing, and it's really unfortunate that we lost a lot of good lenders in this space. And on the counter to that is we're very fortunate that some of the pillars of commercial equipment finance stuck around and found a way to survive it. But yeah, I think forecasting to the future and given how the cycles of this industry have come and gone in the past, there will be new lenders that pop up. There's going to be banks that come back. There's going to be private equity that wants to, do a transportation portfolio. There's going to be a new wave of banks that'll come back into the scene, and that's always been the case. Sometimes a lender will come in hot for a year and they'll load up their portfolio, and then their investors will say, "Hey, great job, but we're going to pause on that. We're happy now," and that's part of it. So there are pillars of banks that have been in this industry, and they're, Crossroads, I mentioned earlier, they're a big time bank, and their whole business model is semis, right? You can't go open a checking account with them. They only lend on semis. It's all they do. And they survived it. There's other banks that you can go get a checking account in that come into transportation. They lend hot for a year and then they pause for a year and they come back and forth. And it's just how it is in this space.
No doubt, no doubt. And I think I would argue that any space, any type of industry, it all is cyclical. Everything has its ups and downs. There's there's another way to say it. I mean, I always believe there's two sides to every coin. As something happens that's negative to one side of the coin, there's another side where there's a huge positive impact on it as well. And I think that there's always opportunity if you're looking at it from the side of the coin that is experiencing success from whatever is happening in that moment. One of the things I wanted to ask you before we wrap this up at all, I'd love to know, Derek, what is it that about this industry? What is it that inspires you to do what you do now?
Yeah, I think it's a lot of fun. I'm a nerd about this stuff. I really think, we're advisors to customers. The way our model works is we essentially are advisors to these customers. Like I said previously, it's very daunting for a guy to try to go get a loan on a semi or 10 semis or 100 or the trailers that they pull. It's so much work. I've been fortunate enough. I've bought a couple houses, I've sold them, and I would have never been able to complete that mortgage without the guy that helped me, right? It was
Right.
overwhelming the amount of documentation and paperwork. And without an expert there to hold my hand and tell me exactly what to do, I would have probably given up and never proceeded with it. And that's what we do, right? We try to make it easy. We're pros at this. We know how to fight the credit analysts. We know exactly where to go. We know exactly every lender in our industry that lends on semis and trailers. We know what they like, what they don't like. We know what they'll consider, even if it says on a piece of paper, we don't look at that. We try to make it easy on these customers, and it's a lot easier for some of these guys to just come to us and trust that we'll take care of all the legwork and make it real simple for them instead of them trying to go and find it on their own. And so, we've built a whole model on that. In that sense, we act as advisors to these customers. And I say every day to all my guys, it's like, we come in and we solve problems for a living. That's all we do. And it's almost like a toxic relationship. Some days I want to just go home and shut my computer and yell at the sky, but I'm addicted to the feeling of solving those problems and helping people. And really, truly, we've been able to take 100 customers, guys that have these real dreams and it's really nice to help a guy get his first truck and get his business started and know that, either escaped some bad situation in another country or he's just a guy with a dream and trying to provide for his family. It's really satisfying to help that guy with his purchase. It's also really satisfying taking some of these customers that we've met that had 5 or 10 trucks and seen them grow into the dream that they've had. I've got customers that I met when they had 5 trucks and they've got 50 now, and we've done all their financing and helped them grow. I've got other customers I met that had 50 and now they've got 500. And it's so fun to be a part of that. On the contrary, we represent some very, very large companies, and it's extremely fun to be able to say, hey, every single day when I'm driving home, I see one of their trucks or trailers, and we do financing for them, and we're a big part of their growth. And I don't know, it's satisfying, it's addicting, it's fun. No day is the same. It's every day's new challenges. Sometimes they're frustrating, but it's a good time to get to the end.
I think that's fantastic. If people like what they've heard, if somebody's listening and they would like to have a conversation with you, they'd like to learn more about your company, what's the best way for them to get a hold of you?
For sure. Yeah. Our website, www.kc-financial.com. Ton of info on there, pictures, contact info for myself, my whole team. And again, we're advisors in this industry on transportation and purchasing. I can't tell you how many times customers pick up the phone and call me and say, hey, this dealer's offering me this. What do you think? Is this a good deal? Or hey, this random bank reached out to me and these are the terms they're offering. Does this sound legit? And we're happy to give our opinion. I think that goes a long way with people too, is being honest, right? Even if it means that there's no money in it for us, the way people keep coming back is just by being honest with them and giving them a real opinion. And I think there's a huge lack of that in this industry. This industry there's a lot of malice in it. And so when you can be honest with people and put your best foot forward, I think it really it shows.
I
People come back to us and trust us with our word.
can't agree more. I think that's the best way to be as a human being and as a professional. I think if that's the way that if everybody was more like that, this world would be a better place.
I agree.
Derek, I want to thank you very much for joining me. I hope that you'll consider coming back on the show. I'm sure we just scratched the surface, and I think there's probably a lot more to talk about and to focus on certain topics and do more of a deep dive. But for now, I really appreciate you joining me, and I'll catch you down the road.
Absolutely. Thank you for having me on. I really appreciate it.